Asian markets have rallied on news that China Evergrande narrowly avoided defaulting on its debt thanks to a last-minute payment. State media says the property giant wired $83.5 million in interest owed to creditors. It was due last month, but the company was given a 30-day grace period, which was set to expire this weekend. Evergrande shares surged more than 4%, helping Hong Kong's broader Hang Seng index rise 0.4%. Japanese and South Korean indices are also in the green. Investors got an added boost from Beijing, which hinted it may start easing its crackdown on the e-commerce industry. One of its main targets of the year-long campaign has been tech conglomerate Alibaba. Owned by billionaire Jack Ma, the company runs payments giant Alipay. Its shares rose more than 6%, while rival Tencent, which owns the multi-purpose Chinese app WeChat, climbed 2%. For more on the story, let's bring in Victoria Scholar. She's the head of investment at Interactive Investor in London. Welcome back to the program, Victoria. Now, good news for Evergrande, but at least 3 other Chinese companies have gone into default because of these dollar loans. How worried should investors be over the state of China's property sector?
Hey there. Well, as Xi Jinping famously said, houses are for living, not for speculation. And it does feel as though there is a serious bubble within the housing market. Now, as you say, Evergrande shares were up by 4% today. But to put that into context, they were down by more than 13% the day before. There are no doubt that there are serious concerns about the outlook for its property sector, particularly with looming deadlines for Evergrande as we come into November and December. And as you say, it's not just Evergrande. There are a number of other property companies involved as well. And this is a very systemically entrenched company that has implications for its financial sector, the Chinese economy, and its society as well, because we've seen protests on the street because, of course, this company builds houses for millions of Chinese people across the country.
Now, let's move on to a different industry now. This month, food delivery firm Meituan was slapped with a lower than expected fine over what the government describes as monopolistic behavior. How much pressure is Beijing under to sort of ease up on its tech giants, given the state of the Chinese economy?
Well, if we look at the Shanghai Composite, it's up just 2% year to date, which is pretty low compared to the gains that we saw last year. Now, a lot of international investors are shunning Chinese equities amid concerns about the crackdown from Beijing. So it does feel as though Beijing is under pressure if it wants to continue to grow, particularly with slowing growth rates. We've seen double-digit growth for some time. It feels as though China's growth outlook is starting to slow. So there is pressure to ease back on some of these restrictions that the government has been putting in, not just on the sector that you mentioned, but across a whole host of different sectors.
Victoria Scholar, thank you for helping us read the tea leaves there, so to speak, joining us from London. Now to other top stories from around the world. Japan's consumer prices rose 0.1% in September, marking its first annual growth in 18 months. The increase was driven mostly by a 7.4% surge in energy prices, which was the biggest rise in nearly 3 years. But the Bank of Japan is expected to continue monetary easing until its target of 2% inflation is achieved. Snap stock plunged more than 20% after the social media company reported it missed revenue expectations. In the third quarter, the owner of the photo messaging app Snapchat also posted a bleak outlook for its fourth quarter, saying Apple's recent privacy changes hurt its advertising business. Shares in ad-dependent rivals such as Google, Facebook, and Twitter also fell after the report. And shares in WeWork closed up more than 13% on their first day of trading on the New York Stock Exchange. The office-sharing company finally went public on Thursday through a special acquisition company, giving it a market value of $9 billion. The figure marks a sharp drop from its $47 billion valuation in 2019, when WeWork first attempted to go public but was forced to stop over investor concerns. And that's all from Business for now.